Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's November 28th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. I'm on the road this week. Visiting a company in New York City. Got to interview the CEO. Test the company's amazing product. And also doing a lot of interviews. Interviews a few famous people that support this product. There's a company I already recommended in Curzio Venture, so I'm really positive on it. I think it could be a huge winner. But whenever I find a situation like this, I really like, I have my boots on the ground, talk to the CEO, visiting facilities, talking to employees, and actually going there because, if the company that I recommended, the sky's the limit because they have a product that is incredible. It's in very high demand. And more important, it's a product that's actually going to save lives. So it's being tested by dozens of establishments. But that's the reason why I'm in New York, because one of the biggest risks to this company is execution. Manufacturing and making sure that's all taken care of. Because if it's not, then the stock is going to go down tremendously. But if they could really, if operationally everything goes smoothly, this stock is a game changer. So my, for me, I like to, be in the field all the time, as you guys know, and really have my boots on the ground and travel a lot. But and for Curzio Venture subscribers, you guys know exactly what stock I'm talking about. But I am on the road this week, which I guess I'm on the road, probably about twice a month. And I love being on the road. I mean, it is tough with family and everything, but just, getting down dirty and really finding companies. And you always get a better perspective when you speak to management teams, employees, and things like that up front. So, while I do travel a lot, one of the best sources I like to keep in touch with people is social media. Especially if it's Facebook or Twitter. My Twitter handle is @FrankCurzio. And, I love posting updates when I'm away because I'm always learning something new and having great stories for you and just things that I learn and stuff. So, it's just a good medium. And it's funny because I was reading my emails the other day and someone emailed me about my Twitter account and said, "Hey, Frank, apparently, you blocked me from Twitter." And by the way, I rarely block anyone. I mean, unless they're like trolling or cursing. I mean, out of the thousands of people, there might be 5 that are blocked. And I really don't remember blocking this person because, I never block anyone just to block them because, I love when people have different opinions, especially different opinions from me, because for me, I always like hearing the other side. That's how you learn, right? So I never mind the criticism, even if it's from maybe an idiot or two. And there's nothing about a certain subject. And it's just kind of weird how we use social media these days and sometimes we troll, but it really doesn't bother me, even if someone takes a shot at me or things like that. So I almost never, ever block anyone. So anyway, this person's a lifetime subscriber to Curzio Research, listens to my podcast for years. I've talked to him through email lots of times. And seriously, I really have no idea. He was blocked. So he emails me and he's kind of ticked off, saying, I'm a subscriber, long-term follower, big supporter, why'd you block me for? And the tone was, let's just say, he wasn't happy. And I kind of get it. But what I've come to realize about social media, when you block someone, when you just block someone, whether it's on Facebook or Twitter, if you block them from having contact with you, I mean, it carries the same weight in terms of emotional response as being punched in the face. Or even finding out your spouse was cheating on you. Actually, being blocked on social media is probably worse. And I'm not kidding. And people take it as if you drove to their house, knocked on their door, and told them to go F themselves and drove away. Actually, I think that might be less insulting than blocking someone. And I know this because I hear it all the time. Even I hear my wife sometimes talk to her friends and talk about, wow, this person blocked me. And that person could be the nicest in the world. It could be the Pope. Whatever, but once you block them, they become public enemy number 1 to that person. So you want to put some kind of voodoo curse on them, or destroy their life forever. I mean, the anger that comes out from blocking someone is insane. And for my wife, if she ever sees the person that blocked her, in person, look out. The stare comes out. That one that every husband gets after your wife asks you to do something more than once, that look, all right, I better get this done, right away. That person almost becomes an enemy for life. which is weird. And I guess I can relate a little because I get a little upset at people when they're driving in Florida. If someone doesn't use their blinker, which happens every single day since like 95% of people don't use their blinkers in Florida. Or if someone swerves in front of me because they're texting on the phone. I mean, I'll open my window and pull up next to them and like shout at them. So I hope you drive into a pole or something. Like I'm so angry. Like, you look at it, and Louis C.K. did a skit on this, but it's true. Like the anger that comes over you for such little things when you think about it. And for me, I really can't believe that some of the things that I say because someone really just swerved in front of me. Again, Louis C.K. has a great skit on it, but it's true. I mean, it's, someone, I guess that's how I feel because they didn't take the 1 ounce of energy to move their hand a few degrees up or down and let me know what direction they're going in. So it's like, you want to kill them. It's crazy. You get all this emotional response. And yes, I probably do have a slight road rage problem, but I could identify with like the whole blocking and stuff. But for me, when it comes to blocking people on social media, it's just really surprising how mad or angry people get. I mean, if you think about it, that means you don't have to really talk to that person anymore, which is kind of a good thing. I mean, why spend time talking to someone who doesn't care one bit about what you have to say anymore? It's actually a pretty good thing, isn't it? I don't know if anyone sees it this way. But the emotion and the anger that comes out of social media and your opinion and how strong it is, just kind of amazing. Like things you would never say straight up to a person, up front to them. You would never say, but you say it on social media. But for this person, I mean, he went out of his way to open an email, write a few sentences about being surprised I blocked him on Twitter, actually cited a reason why he thinks I blocked him on Twitter, and asked me to consider unblocking him on Twitter. And I'm not making fun of this person. He's a lifetime member, someone I like a lot. He actually sends me value-added emails, which are really good emails, by the way, guys. Just highlighting. One time he highlighted a typo on one of the issues. I mean, he sends me ideas. He has great questions on stocks. I'm really not sure how he got blocked from the account, but if that subscriber's listening, you're no longer blocked. So don't place a voodoo curse on me. Don't hunt me down, since I do kind of tell everyone where I am all the time, right? When it comes to my field trips, speaking at conferences. Again, I'm in New York right now. But I'm your friend again. I love you. Forget it ever happened. But man, the response from social media, I'm still learning. I'm not a crazy social media bug. I have thousands of followers on Twitter and things like that. Again, at Frank Curzio. I love updating people when I'm on the road. But it's just amazing how that medium brings out so much emotion and response and things you wouldn't really say to person, or if you see like face to face. But you say these things on social media. It's kind of amazes me. So be careful who you block, especially if you actually know that person or you're going to come across them and see him again. Because, man, that could be in big, big trouble for you. Anyway, even though I'm on the road, I always make sure to put out a great podcast for you. And today, I'm interviewing someone I love because I always learn something new when I talk to this person. He's original, puts out great content, has one of the best trackers when it comes to picking stocks, especially on my podcast and identifying new trends. You guys probably notice, wonder if you know what name it is, and that name is Chris MacIntosh. So Chris is the founder, editor-in-chief of Capital Exploits. It's a great blog where he highlights some of his investment strategies and ideas to the masses. He's also the founder, managing partner of the Asymmetric Opportunities Fund, manages money for investors and institutions. I've known Chris for a few years now. I've been interviewing on this podcast a few years now. Great friend. And some of the suggestions he made specifically for you on this podcast have been remarkable, especially by Bitcoin at 400. It went to 19,000 a few years later. Yes, I know it crashed. It's under 4,000 now. It's still an amazing call. I'm talking about a couple of years ago. So today, Chris is going to discuss the current state of the crypto markets, which are crashing. And he's also going to break down an industry he believes has enormous opportunity for investors. I'll give you a quick tease here. It's one of the ugliest sectors you could have invested in over the past 5 years. Definitely one of the most hated sectors. He's going to tell you exactly why he loves it. So you know what? Let's jump into that interview right now with Chris MacIntosh. Chris MacIntosh, thanks so much for coming back on the podcast.
It's my pleasure, Frank, and it's good to chat to you once again.
So, I love talking to you because you've been into the crypto markets, have known a lot about the crypto markets and made fun of missing Bitcoin at 400 because I think someone gave it to you in the single digits or something. But you did mention Bitcoin at 400. And yes, we know that Bitcoin has crashed and it's a little into 4,000, but it did go to 19,000 before that. From someone who's been covering this industry probably longer than most people out there, what are your thoughts on the current state of the industry? Is this just like a transformation? Is this something that's going into is this a market that's going to remain like this for a while? I mean, the altcoins are getting killed. I mean, what are your thoughts on the overall market, which just seems like, it's completely selling off in the face of, more regulation, which I think is a positive thing, probably going to come out on this sector over the next, 6 to 9 months.
Yeah. So look, firstly, let me make the point. I think it should be obvious, but I'm not an expert in crypto. I'm a macro guy, and I've always looked at it from a macro perspective. And when I look at any asset class, and I think crypto is an asset class, in its formative stages, you have incredible volatility. Despite what we're seeing at the moment I'm not going to talk about the other coins because they haven't been a focus of mine. There came a time where people were saying, what do you think about this coin and that coin? And, they all look good, just like I didn't treat it any differently, really, I guess, to venture capital, which is where you've got all these wonderful ideas, but most of them are going to blow away. And, the execution of them is, firstly, it's paramount. And then secondly, you also need to have the technology or whatever it is that's being built. It needs to be taken up by a market, and it needs to acquire sufficient market share and thus liquidity for it to actually work, because it's not always the best ideas that actually win. That's certainly not the case. We would all sort of wish that was the case, but it tends not to be. And you can kind of see that with Bitcoin. Bitcoin, I'm not an expert in this, but as far as I can tell, Bitcoin isn't, the best cryptocurrency on a technological basis, but it has gained the most users, and as a consequence, it's also gained probably the greatest level of security, and that's one of the main attributes to it. And so, it's winning, if you will, against the other ones as a consequence. But coming back to your question, I'm always interested in an asset class that has gone down by 80-90%, provided that you look at the underlying and you say, well, is it possible that this thing is going through a Kodak moment and it's just going away, right? And if you can answer that question in the negative, then you have a decent probability trade on your hands. And that doesn't mean that it can't go down another 90% from where it's at, right? So just because something's down, say 80%, I think Bitcoin's about 85%, something like that today. Now, 90% from where it's at today, or, isn't a huge move based on where it's come from at 19,000. But if you bought it today and you went down 90%, you would definitely feel like you'd feel a certain amount of pain. But that is typically what you'll see at the bottoming of a market. So, the question that I ask myself with all of this stuff is that technology going away? And, it's just a matter of everything that I look at is just a matter of probability. So, we're looking at shipping sector, for example, and it's been absolutely decimated. And you say, well, is shipping going to go away? Probably not. Unless we start flying things with, I don't know, autonomous vehicles or God knows what. But the point is, you kind of look at these things and you say, okay, what's the probability it's actually going away? And I'm seeing a Kodak moment. And if the probability of that is low, then it's just a matter of pricing. And again, that doesn't mean that it can't bump and grind for 2-3 years and just piss you off, quite frankly, because it doesn't, pay you. But that is essentially often the setup for a truly asymmetric trade. And so when I think about Bitcoin today, I'm pretty interested because it's fallen so far. And when I ask myself that question of will it go away, then I tend to come down on there's two things that concern me. I'm going to use concern. One is that I don't believe central governments will want at any point to, allow a competing currency. I think that's a kind of a given, and I think most people would agree with that. And in that environment, you could argue that it would be a competitive currency and it would be shut down. Now, I think we've been through a sufficient period of time where that has been kind of tested, and there's been more and more regulation, which you alluded to, which has been positive in that respect, insofar as they've classified it not as an asset class, and they'll tax it and everything else. And so there's no indication, at least from in the US where you're based, that they're going to just shut it down and it's not going to be anything that could be tradable. So I think that's a positive side of things. The other one that is I think quite important is, Bitcoin was born in the 2008 crisis. It was born, one could argue or one could guess, by a bunch of guys, or a guy, or hell, it might have even been a girl, who knows, to solve that problem of trust in a banking system which is extremely untrustworthy. And it does so extremely well. And so, sure, I mean, it's you can't move capital around with Bitcoin as fast, for example, as Visa. It doesn't process the transactions as fast, but there's side chains and there's all these other things that have been utilized to help facilitate that process. And at the end of the day, it is a trustless service and a trustless system. And so that's the whole blockchain thing. And people make the mistake of saying, oh, I like blockchain, but I don't like Bitcoin. It's like, well, Bitcoin is a blockchain. It's just, it is a blockchain, and it just happens to be the most secure that we've got today. So based on all of that, which I guess you could call fundamentals, I'm pretty interested in where it's at today. I look at all of these sorts of things, and the important thing for people to understand is that you need to have that in part of a balanced portfolio to go in and say, okay, I'm going to put 50% or 20% or something like that into, any asset class. Some people do it and they do well. And typically those are the guys that you're going to read stories about, not when they've blown up, but when they've done well, because when people blow up, they tend to just be quiet and go and hide. But for me, that's too risky, and I wouldn't ever advocate such a position sizing. So I want to have a basket of a whole lot of asymmetric plays where my risk to the downside is relatively low and my risk to the upside is multiples. And so Bitcoin fits into that narrative and fits into that class relatively well, especially given how bearish the market is on it now, and the fact that the fact is, Frank, we've been through this before. And I mean, alluded to before, I was shown Bitcoin and it was bloody few bucks, and I couldn't get my head around it, so I didn't do anything about it.
A lot of people there too.
Yeah, and then it ran over $1,000, and then it collapsed back to about 150. And my first stab at it was at 250 coming out of that trough. But it was much, much riskier, I think, then than it is today. Because today that protocol is a much more robust protocol than it was then, because each transaction that gets processed, it basically builds the sort of strength of it. Anyways, so that we've been through those sell-offs before, and the interesting thing that I look at is the volatility of it has actually decreased. Even though it's pretty volatile now, it's actually continuously decreased because of the volume of transactions. It's really any different to having, say, a penny stock trading as opposed to GlaxoSmithKline or any large cap company, for example. As it gets larger, then the volatility is dampened. And so we have seen that with Bitcoin. Again, I'm not going to talk about the other old currencies because I don't know them, and I'm sure you've got other guys that you could pull onto the station that know a whole lot more about those than I do. And I took a little stab at Ethereum way back, and then I realized that I didn't fully understand. Well, I didn't feel like I fully understood how that could play out, and there seemed like there were some complications, and so I just sold out of it and took my money off the table. And that was, in hindsight, just lucky, because it had a fantastic run, but it wasn't due to any prowess on my part. But at this point, when I look at Bitcoin, I think it's pretty interesting. Also, there's these outside things, like for example, we've just had the Iranian sanctions where they basically pulled them out of the SWIFT system, and that's catastrophic. That is really, really catastrophic to a country. And I sit there and I think to myself, what if I was the guys on the other end of that? In other words, the Iranian political class. How would I go about conducting business? Would I try and create my own SWIFT system? They don't really have the technological prowess to do that, that I can sell. And we know that China's been setting one up and so on and so forth. But in an environment like that, to me, there's a possibility, albeit a low one, where I might say, you know what, I'm going to utilize something that exists. Sure, I don't have control over it, but then they don't either. And I would use something like the blockchain, the Bitcoin blockchain, to net settle large transactions. So if you're trying to sell goods and services, you would create a holding bank that you would give access to your customers to, and you would net settle on the blockchain, which isn't obviously anywhere near as efficient or rapid as SWIFT, but it allows you to actually continue doing business. And so, and I think it's also when you see those sorts of financial warfare, if you will, at a political level, you got to realize that other countries are going to be looking at that as well. China's going to be looking at it. Russia's going to be looking at it, going, okay, we could be next, because there was also, a warning shot. It wasn't just directed at Iran; it was directed at any of America's enemies to say, what, toe the line, or else you're going to get the same sort of treatment. And so, when you sort of look for solutions to that problem, there is Bitcoin can solve some of those problems. Whether they actually use it or not, I don't know, obviously. But it's interesting that it's this technology that is open to anybody who wishes to use it, and there isn't a need to trust anybody, and that makes it incredibly unique. It always has. I'm not telling your listeners anything they don't already know. But what I am suggesting is that the utility of that today is arguably quite a lot higher than it was 10 years ago, when we didn't have these sorts of political antagonism.
No, that definitely makes sense. And one of the things you mentioned earlier too, when you say that, people ask, and I'm sure you get these questions too from people that go to your Capital Exploits blog and stuff like that, where, how much should I put in this situation? I want to put a lot of money in this situation. And, us as being trusted, and we're not, I'm not an advisor or anything, but, I'm always quick to say, don't put all your eggs in one basket and this and that. But I also tell them there's not a billionaire that's around today that hasn't put all his eggs in one basket. So it's up to you to do what you want to do. But in reality, you want more shots on goal. You want to be smart about it and allocate to a lot of these ideas. And if a couple hit, it's a game changer. But just be careful on that. But it's so funny when I tell everyone that, no, spread it out and be careful. But, I've known guys have gone all in and done very, very well. Like you said, most of the time you're not going to hear from them, those people who don't.
Well, Frank, it's a perfect point. The guys that have made fortunes and stuff are those who have gone balls to the wall, and they've done, put pretty much everything in one basket. But what you got to remember is that typically they're in an environment, or they're in a sector or something that they know extremely well. And so you think about businessmen. Most businessmen shit, if he's just I don't know, got a bakery, it's like he's got the vast majority of his wealth in his bakery or in his chain of bakeries. And you look at that and you go, well, that's not diversified. And it's like, no, it's not. But that's his business, and that's what he knows and understands. And that's probably where he'll make his first million and 10 million and whatever it is. And so it's absolutely true that if that's what you're after, then fine, you can go all in. But then I would suggest that needs to be your business. And so, I think the mistake that people make is that they want to be managing a portfolio on the side while they're doing something else. I don't know, maybe they're a dentist or they're a plumber or God knows what. But they then decide that they're going to go all in on a particular idea that they've heard about, but they're not living it. And that's a big, big risk to take. And you might get lucky, and then you might be able to be that dude at the cocktail parties who pulls up in the Lambo. But the probability of that is extremely low, and there's a much higher probability that you're the guy that pulls up in a Skoda and goes, well, I brought my $5 bottle of wine because I couldn't afford the $25 one or whatever. So, it depends on who you are and what you're trying to achieve to manage a portfolio. And so, like, I'm not trying to become a billionaire. I mean, I'm not. I wouldn't say that I wouldn't like it. I think I probably would, but that's not my goal. And certainly the way that I manage capital it's not the answer. Everybody's got a different equation that they're trying to solve. And shit, when I was in my 20s, I took massive risks. I went all in on certain things. And some of them worked extremely well and some of them didn't. But that was a different period of my life. And I had a different risk profile. Today I'm more interested in keeping what I have and trying to grow it, as opposed to, trying to hit the ball out of the park. And so I'm focused more on multiple situations which pose asymmetry for me, and then placing my bets across those, knowing that not all of them will work out.
Well, Chris, let's we got about 10 minutes left, and I wanted to get to something interesting that we've talked about offline. And one of the areas that you're investing in right now, believe it or not, is Europe, right? So we hear so many negative things, and we've seen these markets really come down, and the rising dollar hurts these guys. But you're seeing an opportunity where, and I'll let you explain it, because you're seeing an opportunity in a market that not too many people are seeing that opportunity right now. And, those are the kind of markets, from what I've known and what I've learned about you over the past couple of years, these are the type of markets you like, that are depressed. Nobody really likes it, and everyone's talking bad about it. And, you're seeing some opportunity there, right?
Yeah, well, I think a lot of it starts, it's global, but Europe is at the center of it. So I'll try and keep this as short as I can. If we think about where we've come from in the last couple of decades, and certainly since the GFC, we've had an extremely benign political environment. We've had accommodative monetary policy. And I think the blow off top for that was the GFC, both on a political and economic basis. So we saw, negative interest rates, and basically everybody all came together to solve what was seen as a collective problem. Okay. And I had always made the argument that as long as that existed, you didn't want to be shorting that. In other words, shorting the bond market. And as insane as it was, you could have looked at it and gone, this thing is bloody mad. These governments are broke. They're not going to pay the money back, yada, 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 yada. That's all true, but you needed to have a catalyst that would change that dynamic. And I believe that catalyst, and I still do believe that catalyst was a political one. And we sort of began with Brexit, and it's Trump, and it's now Salvini in Italy, and so on and so forth. And so in that environment, the main, one of the main areas that I'm focused on is in Europe, because I think it has the greatest propensity for a political fragmentation and an economic fragmentation. I think the euro is a ridiculous concept that was destined to fail. But again, you needed to have some catalyst that would change that dynamic. And so I kind of think we're in the first innings of that all breaking up. I mean, we just saw, for example, Italy, causing problems in the EU, where, the Italian government just rejected the EU's calls to revise their budget for 2019. And this is a big deal. Italy's like the third largest economy in the Eurozone. I think it's about the eighth largest in the world. It's a decent sized economy, and that's just one of the many problems that we've got within the EU. Obviously, there's Austria, there's Hungary, there's Slovakia, and all of these countries that they're somewhat antagonistic to the EU. They're seen as Russia friendly and so on and so forth. And that brings me, I guess, to one of the things I've spent a lot of time on. So, like, if you go back and you think about what the EU was, it was this collective where everybody was going to come together. Sorry, the Eurozone. And one of the interesting things that happened was that, because you didn't have any more border controls, a lot of domestic military spending collapsed, because it's like, well, why do I need any military? And they basically outsourced it to, at the end of the day, NATO, because you didn't have the need for domestic security, and you just needed this, think about it like a wall around, or a border around the Eurozone. And that was, there's a concept that everybody was going to chip in and pay for that. But as always, it's like if you've got kids and you say, okay, it's all of your responsibility to go wash the dishes. Well, guess what? The dishes don't get bloody washed, or they natter and fight over who does what. Whereas if you say, Johnny, you're washing the dishes, and Freddie, you're drying them, then this shit gets done. And so that's kind of really one way to think about what happened with military spending. And then it was all outsourced to NATO. NATO is basically the US. And now that's in disarray because Trump's gone, well, screw it. We're not really interested in paying your bills, or we'll pay them. But you know what? Then we want all these other trade deals renegotiated. And, it doesn't, again, I'm not here to argue whether that's fair or not. It is what it is. And that's what's more important. I'm more interested in what will be than what should be. And so that's all now under massive pressure. And I've been saying that we're going to see military build up in the EU, and we've just seen Macron come out basically and call for a European military. And anyways, so that is very interesting to me with respect to how capital gets spent in Europe. And if I'm going to pin it down to one thing, because I know we've only got a few minutes left, you cannot, well, firstly, we can have increasing nationalism across the world, but especially in Europe. That increasing nationalism is going to foster increasing military spending at a domestic level. And when you think about security, Frank, you cannot have security without energy independence. And that is going to become a massive issue. Germany, for example, basically just got rid of all of their power. They outsourced it to Poland and to France. They said, no, we're not going to have nuclear. Fine. So they got rid of all their nuclear, and then they just bloody bought it in from France. It's the dumbest thing ever, but that's what they did. And now they've got the pipeline to Russia. And so they're under Russia's thumb. And the Yanks are saying, well, you guys have got to, we don't want that deal. How about you buy our natty gas instead? And they're going, well, shit, that's too expensive. And so there's this whole conundrum. And if you were sitting there as a German politician, you and I tell you what would make a whole lot of sense would be to turn back on our nuclear power reactors and to go back to dirty old coal, because it is much more, it would allow us to have energy independence. And again, we can't have military security without energy independence, and none of these countries can. And so that entire thought process, I think, we're going to go through a change in terms of how countries think about their national security. And at the forefront of that, I believe, is going to be energy, and that's not priced at the moment at all. So that's an area that we've been pretty heavily focused on at the firm, yeah. And there's a lot of factors that play into it, and there's multiple different asset classes that we're looking at, and so on and so forth. But I think that's, like, as a broad brush picture, I think it's something that people should be a bit focused on, to try and understand what's going on there and how that's going to play through.
You know what, Chris, I'm proud of you, because you always tell me, you know what, Frank, stop me, because I get into things and sometimes I talk a little too much. I'm like, no, I love hearing that, the whole entire story. So I want to go even further on this, because how would you place, because so we have investors, most of them are, this is an international podcast. We have broadcasts in over 100 countries, which is really awesome. But most of the people listening are from America. So they might look at this and say, well, how do we play it? And my question to you would be like, okay, I get uranium. We hear that all the time. But natural gas prices, when you said they're high, people may not understand that. Here they're low because we have like an unlimited supply. We're burning it, basically.
No, they're high. They're high if you're buying. So because Germany's so far, they've got to ship the natty gas from, whereas they can get natural gas from Russia. So on a comparative basis, American natural gas is expensive to them. That's the point, is just to clarify. Yeah. Okay.
So when you say energy, what's the play here? Do you think it's, hey, they have to go back to uranium? Is it maybe coal? Is it they have no choice with natural gas, oil?
Yeah, like it's different for each country, depending on their own energy supplies and their allies, or what are considered to be their allies. One thing that, and Trump basically showed the path forward in this by exiting the Paris Accord, right? You can forget about carbon emissions and all of that stuff that we've just been through. In what I think we're moving rapidly into, political security, which is the same thing as national security, which is political security, is going to trump, no pun intended, all of this, all of the stuff that the beardies and the greenies have been championing for. At the end of the day, it's going to get pushed aside, and we will probably go back to things that we've seen in the past, good old fossil fuels, some of the good old fossil fuels. Again, each country is different, so we've kind of got a whole matrix of looking at different countries and where they're sourcing their energy from, who those parties are, what are their relationships like, what do they have on the ground, all those sorts of dynamics. Again, so there's different dynamics for each and every country, but the main thing to understand is that we've got a much more politically fractious environment, and this isn't just Europe. You think about Japan, think about Korea, and certainly, I speak with hedge fund managers and friends and colleagues in that space, and those in Asia today are feeling a whole lot more at risk, I guess, than they have in the past. You've got China's moved into the South China Sea. They've built aircraft carriers on the islands, which they promised they wouldn't do, and now they're saying, well, they're not aircraft carriers, they're just islands, and we just happen to have aircraft on them. So, that's all. And it was interesting because that was promised that wouldn't happen, and it's just happened, and the US never did anything about it. And now, if you were going to step in and actually try and open those seas up, you risk a serious firefight. Anyway, the point behind all of that is that puts a lot of pressure on a lot of these other Asian countries where they're not so sure about their security. And Japan in particular, right? They don't have energy independence. That's why they were using nuclear. And so, but again, it's true of many of these countries. So they're all looking around, going, "Who are our allies? How do we ensure our national security?" And one of the first things when you're trying to answer that particular equation is you look at your energy. And so it's no secret that Japan has been. You can actually go onto the Japanese site there. I'm trying to think of the name of it. there's a fantastic report that's been put out by the military, and they literally talk through all of these concerns that they've got, and they've been building up their strategic supplies for that very reason. They don't know if they're going to war, but they want to be prepared. And that's, again, it's not just Asia. So across, especially in Europe, I think we're going to see the same sort of thing. It's like if you and I are buddies, and then one day I do something to screw you, suddenly your trust is broken. You're like, damn, I thought he was on my side, and that bastard's not, and you reassess everything, and you hunker down, and you make sure that, should I give Chris my password to this, or my, and you start changing and hunkering down. And that's basically at a macro level where we're at today. And so, that's the kind of broad brush stroke. And again, then we just sort of dive deep into each of these countries and into their, who their allies are, what their energy structure looks like. And then, sometimes it's unfortunate. You come across something, you think, oh, that's where it's going to be. And then you look at stuff and it's not really priced that well, in that it's relatively expensive. And so you kind of keep digging and you find, second order events and so on and so forth. And that's basically what we do, is focused on things like of that nature.
Now, and we got probably a minute left here, so this may be hard to answer in a minute. So I know you and the type of research that you do. I mean, it's amazing when you come up with a thesis, but you're one of the guys I talk to that always finds like the best way to play something. Sometimes I make that mistake when I'll see a trend. Like I saw higher oil prices coming. I said, $4, ton of supply came off. This is before the recent crash. I was like, and these companies were just, I knew price had no place else but to go higher. Just the fundamentals made sense. OPEC was going to continue to cut and maintain that. And I knew oil prices are going to go higher. So, but sometimes I'll pick the wrong stocks based on that, thinking like, hey, you can get aggressive if oil prices are really going to go higher, which they went to $70. I thought they'd go to 60. And again, this is before last month, past couple of weeks, and it's crashed. But you have a great way of finding like the best way to play things. So without giving anything away to, your follow, the people who follow you, and someone listen to this, because it's amazing when you could, identify which countries the allies and go through everything. What are some of the ways? Is it unique where it's hard for individual investors to play? Like, say if you found whatever, I'm hypothetically, could stick with Europe and say, Italy and energy independence, and they're going to focus on whatever it is, natural gas, coal, just making all this stuff up. But you're able to find like the best way to play this. Is there anything like that's kind of simple for investors to say, hey, you know what, this is something I looked at, guys. You need to look at this country or this part of that energy a little bit more, because I know that they love ideas and I love following you.
Well, first answer to your question, like none of this is hard. It just takes a lot of work. I mean, it's not hard. You just got to forget about stories that you hear on mainstream media and just look at the numbers, look at the facts. I've got a subscriber actually just put out something really interesting recently on a Greek bank, and it's the same story. And I look at it, and he's nailed it. I think he's nailed it. He runs money out of Hong Kong, but it's just forgetting about the narrative and just running through, seeing if it makes sense, and then looking at just doing your homework. And so the same is always true of any sector. Now, firstly, I'm not. You made the point of picking the wrong stocks and stuff, and that's so easy to do. And I've learned that the hard way. And often you learn it like you pick something and it bloody rockets, and you think you're a bloody genius, and you're not. You just got lucky. And so I'm very much sector based. So I will find I will put together what I call like a quasi ETF, and it runs through a different risk structure. So at the far end of that risk structure, for example, I might be buying warrants or options on futures or something of that nature, right? But that's a whole lot more risk. It's got a whole lot more risk, but then I could make 10 times or 20 times my money, fine. But it might go to zero. And I might, let's say I take a sector play and I'll put 5% into that sector. And then within that 5%, I might have 1% of my position is in something of that nature, right? And then another 1% would be in something as simple as an ETF. And then another 1 or 2% might be in a basket of stocks and so on and so forth. So I kind of structure it in that fashion. A, so that I don't get run over, and B, so that I've got a risk-adjusted portfolio. And so that's basically how I try and solve that particular problem of, because I'm not a stock picker. I'll look at these sectors, and then I start getting on the phone with buddies who're way more smart than I am and saying, hey, I'm looking at this, I'm looking at that, what do you think? And unfortunately, I've got a lot of friends who are specialists in each of these sectors, whether it be shipping or offshore oil or uranium or whatever. I'll seek out some expert knowledge on those. But I start with the top thing, and that's, for your readers, that's what they should do. Whether they follow me or not doesn't matter. I mean, if you've got an area that you can see there's a great probability for you, and you don't have that, the time, team of analysts and everything that's, Mike Elkin really well, and Mike's a good friend, and he's my go-to guy for uranium. It's like, and I don't mind telling everyone, like, if I want to know what's going on, I go and talk to Mike, and that's what people should do. And so, you find specialists and you find people who are exceptionally well in some of these sectors, and you go and you seek out their advice and buy their publications if they got publications, or listen to their podcast or whatever the hell it is.
Yeah.
But there is no easy answer. You got to do your homework. So, yeah.
No, it definitely makes sense. And by the way, because Alkin writes a newsletter for us, so don't compliment him too much, or he's going to let me know about it. So, but he is by far the smartest guy I know in uranium. For me, saying that as someone who's followed uranium and knows a lot of the key players in the space, the research that he's done of it is pretty amazing. But so Chris, listen, thank you so much for coming on. I get so many emails saying, when's Chris going to come back? And every time I call you, you're willing to come on right away. And, I just really appreciate it. I know my listeners love you. You always have original content and things to say, and that's probably one of the reasons why. But I just want to say, thanks so much for coming on and taking the time. I really appreciate it. And doing this interview from where? Where are you, by the way?
New Zealand.
It's great.
Yep. The land of the Hobbit.
Yeah, I miss those movies. So, Chris, listen, thank you so much for everything. And, we'll definitely touch base soon. And, thanks, buddy. I appreciate it.
You're welcome. Always good. Thanks.
All right, guys. Great stuff from Chris. He always has original ideas, great analysis for our All-Star portfolio. We always take some of his ideas and throw them in there. Again, that All-Star portfolio is really cool, guys. If you get a chance, it's something that's extremely affordable for you. I'm not selling this thing. It's $1 to try it out. If you don't like it, cancel it. It's $9.99 a month after that. The reason why we do that is because I realize a lot of people were not taking advantage of some of the stock picks that my guests and people I interview were recommending. So I wanted to cover them, put them in a portfolio, put a type stop on it. You're getting a pick almost every week from everyone that I interview. And sometimes those picks aren't on the interviews, guys. Sometimes those picks are, I'll talk to them before or after. And again, we're always sharing ideas all the time in all my contacts, people who I've known for 25 years, an amazing network, which includes you, who also send me ideas as well. And a lot of those things make it to my newsletter if I do my due diligence and things work and I like it. We've done very, very well, but that's how you have access to great, great ideas. Not just by doing screens and looking at this. A lot of things that don't come up in screens, especially small micro caps, and having a great network and talking to these people in different industries really helps. And Chris is one of those people. But again, this podcast is about you. It's not about me. So let me know what you thought. Frank at CurzioResearch.com. That's Frank at CurzioResearch.com. And guys, in New York for you, working hard. We'll be back on Thursday. We've had a great Frankly Speaking podcast for you on Friday, so we're on schedule. So if you have any questions you want answered, guys, on that podcast, a lot of you, it's a different feed. Used to be on the same feed, and some still get questions. Frank, don't you do Frankly Speaking? Yes, we do. It's on a different feed. Just every single Friday. If you have any questions you want answered, send me an email. FrankCurzioResearch.com, Frank at CurzioResearch.com. And you never know, your question may be the one I read on that podcast. So, guys, that's it for me. Thanks so much for listening. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.